Morning, everybody. Hope you guys are doing well. Well, today we had CPI, as evident by the large 830 candle today. Good 200, 300 points we've already moved. I had a bearish bias going into the morning. I wanted prior to 830. That was so yesterday. I was building a bias. I was bearish going into the morning, and obviously 830 spikes up. We have a nice classic London protraction profile that's building today. Nice 1 hour sell side here being ran through, closed above, obviously expanding up at 830. So my expectation is 930 to 10 would like to run for, at a minimum, Friday's buy side liquidity, Friday's swing high, and then we also have all of this relative equal high in here. So I'd be marking out after that the smooth highs up at Wednesday's high. So we got these stacked highs here, which to me looks like a likely drawn liquidity. That would be Friday's swing high and then Wednesday's swing high from last week. So short-term draw being the 848 swing high. You can see we're tagging into this inefficiency with the breaker. You can look at that as a SysD here. We should run that, and then we should run the 21,373 level next. And I'm looking for post 10 to form the new high as usual. So that's the targets for right now and what I'm looking for. So as long as we continue to get bullish price action, that's what I'm favoring. You can see we came all the way down into, look at how we have this hourly imbalance. I'm going to mark out both this. We'll mark out just the hourly one, but we have this hourly sibi, right? And a lot of times when you have these inefficiencies that are opposing the draw on liquidity, so if this swing high is the draw and we have this market maker buy model here, these inefficiencies will work as speed bumps. And in order for them to be traded through, they have to be efficiently delivered. So both with buying and selling. So if we have this large up closing candle in here, we're expecting price to come back down, possibly even close with the down closing candle down to the discount end, or potentially anywhere in here that would have an inversion array, and then trade all the way back up. So as you look at the 1 minute, we've got this full closure all the way back down, working all the way down to the discount end, and then expanding back up. So at this point, you would expect, preferably if there's SMTs at that low, you can find hopefully in there, either with the higher time frame PD array or at the short-term low, which you don't really have in here. You could be looking at SMT as well on the daily low, which is what I'm more interested in, which we don't really have anything clear from what I was seeing. With YM, we do have daily SMT low on that hourly sell side. And you can see YM is much, much higher than the other two are. So I'm expecting a six sister concept here on ES and NASDAQ to play out, continuously pushing us back up. And you can see we're starting to get decent PA. We've got this last two down closing candles, low probability order block range. But if we tap that and start to continue back up, that's pretty bullish on that end. But you can see we just barely wicked into this inefficiency. And we got a decent move out of that, even if it's 20, 30 points. That's still decent price action. Now, this week we had expectations of, after CPI, you kind of have free reign. You have better price action. You have better ingredients, better pizza. I'm just kidding. All around is just much easier to trade. So days before CPI, whether CPI is on a Wednesday, Tuesday, you just want to skip out on the days before. And then after that, it's much easier, even if you don't trade the CPI day itself, to find a lot of times expansion moves on the weekly perspective, finding where that weekly draw is, and on the lower time frames of actually getting daily legs. Because we know tomorrow we have 8:30 news, and then Friday, obviously, looking for good price action as well, hopefully. So at this point, we respected that bullish order block I was mentioning. Now, the reason that this is low probability is for two different things. So look at that swing high to be taken now. Two different things. One would be the fact that there's a lot of wicks in this range. So whenever you see larger wicks and less candle bodies, that's the first indication of potentially a low probability order block. Two, there's no gap after it. So there's no gap to pair with that, which is another indication. And then third of all, The reason you could start to look at this is maybe it's slightly higher probability order block is because we actually traded into a breaker. We also traded into this inefficiency. So you could see some reaction out of that. That's the only reason you could see it hold up. So in the hierarchy of order blocks, this is not a super high quality one, but the fact that it's actually being respected to me indicates price action is quite strong. So I like to see something like that. And if I'm wrong, if it trades through that, that's perfectly fine. If it holds it, that's even better for my bias. So you want to have these arrays where even if you're wrong, it's not going to hurt the underlying narrative. And that's how you start to tape read, is by understanding, okay, there's going to be different PD arrays that when I start to mark them out, I'm going to be wrong, but that's fine. As long as I know, okay, my drawn liquidity is here, and I'm tape reading a high quality day, I can just start to mark out different arrays, whether it's a gap, whether it's an inversion gap, breaker, SIST, order block, whatever you want to get good at. If you start to just mark them out and be like, okay, it's not going to hurt me if I'm wrong, especially if you're not even demo trading on it. A lot of times it can be helpful. So we did take out a premium array, that short-term high. Look at the time of day right now. We could get a short-term drop into discount. That's not unreasonable. So we can mark this out. If you want to come all the way back down into here, it's not impossible. It wouldn't be against the bias. I would favor if we stay above. I would favor if we keep this as an intermediate term low and we don't ever come back to this short term, this swing point here. That would be the best case scenario. And we continue the strength up into the highs. So I'm looking for 21,320. What is this? 21,373. And then up into 21,448. That would be up at, what's this? 21,448. Okay. So I've got an efficiency here. So, especially for these higher impact 830 news drivers, trying to first of all, you shouldn't try to trade them. It's the main thing. There's just too much volatility. There's too much slippage, and I'll show later on, if I remember, I'll post a video of I was just up this morning at 6:45. I had to do some things, so I was there's a reason you don't trade these news drivers, is because there's slippage, where basically, if you don't understand what slippage is if you have a stop loss, say you're short and you have a stop loss here, a lot of times these new drivers are so quick that it'll almost gap above your stop. It'll come up to it close and then print above your stop and not actually trip your stop. And it'll continue to print up like this. And it may be until the next 1 minute candle is printed that you actually get your stop loss filled, or you have to maybe manually close your position. So sometimes if your stop loss is maybe 20 points, you can get slipped for maybe 200. And there's not much you can do about that. You literally have to just sit and watch as it eats away at your equity. So it's never a good idea to trade CPI, FOMC, or NFP. Those 3 tier 1 news releases, you just wait for them to print and trade after it. Other 830 news drivers like PPI or whatever we have tomorrow, most times, if you were to get in beforehand, you have a nice stop. It's not going to have as much volatility as slip you into like the slippage of hell. So watch your account blow, then swan dive on. Exactly. And trust me, I've done it before. Back in the good old days, I used to put option strangles onto FOMC, if anyone knows what that is. And I would, like, looking back at it, it's the stupidest thing, but good times. So dropping into the gap, we've got this tiny 1 minute order block. We'll see how it holds up. Oops. So we're into macro time as well. So I'm still looking for that short-term high post 10 a.m. So any swing high that's formed before that, to me, should be ran out. So this now becomes a short-term draw. And we can continue up until a higher time frame pool, which would be that buy side here at 21,373. So I'm just relying on time of day now. I don't care if we run this out. I don't care if we run this out. I'm relying on strictly time of day. So 10 a.m. is where my focus is. Anything before that, I know it's going to continue to go up, is my expectation. And we've seen it so many times print out where I can trust that kind of logic. And in theory, you're just going long for 30 minutes from 9:30 to 10 o'clock. And I'll share my execution today as well of what I was looking for. I don't see great opportunities to enter based on how wide my stop would be. Yeah, that's the only thing about CPI is sometimes you get these larger ranges, and a lot of times you got to just drop position size. Anyone who uses demo, or if you choose to use evals and things like that, I don't think you should always enter with the same contract size. It should always be based on a strict stop loss amount in dollars or ticks that you have, not in ticks, in dollars. So I would, like, for me personally, if I was in an eval, I would take that total drawdown I have and divide it into max loss days. For example, say I have $1,000 on a demo account and my drawdown is 1,000. Then what I would do is I would divide that into maybe 10 days. So watch how we hold this order block and the inefficiency. I'm looking for it to actually keep that. We also have a 5-minute gap below us, which is fine if it trades into right here. You divide that into 10 days and you have 100 risk per trade, assuming you take 1 trade per day. And then you're going to drop risk by 50% once you take a loss. And you're going to continue to do that really until you can recoup. You can do that again if you take a secondary loss. And you're going to keep that risk until you reach back to equity high. So if you took, $100 loss, then you drop down to a 50 risk and you use the 50 risk until you back up until equity high. If you take a loss on that 50 risk, then you drop to 25. And then you're going to take wins up until you get to whatever your equity high was at the 50 risk. Then you go back up to 50 risk until you get up to 100 risk. And that's the way I would approach it. And then, yeah, if you've got my position size calculator, I think that's just simply the easiest way to do it. I always use that every day. You simply can just punch in, okay, here's my risk, here's my stop loss lot size, and then it'll tell you how many contracts to use based on what instrument you're trading. 5-minute PDA SMT with ES. I see it. Yep. So ES failed, actually tapped into that bisi there on the 5-minute. Nasdaq failed to. So look right here between these two. And then if you go to ES, you've got that tiny gap being traded into right here. Tagged. And if we displace up through here, this last up closing candle should be used as a mitigation block. So if we get any closure up through here, we have a gap, really, really high quality entry off the mitigation block. And if your value gap, if we form it there near that swing high, if you can expand back up. So there's different, when I have these retracement legs, In order to determine when the retracement is over, I'm looking for same thing down here, basically confirmation of reversal, because retracement and reversal look very similar in the sense of their functions. One is to take stops, one is to rebalance an inefficiency or seek fair value. So when I'm looking at when is this retracement line going to finish, it can continue to go down up until, for me, if I see a closure above here, that'd be one indication. That'd be a sibi, right? These last two down, last four technically, down closing candles, that's tapping into a higher time frame array or just retracing into discount. When we see a closure above there, preferably with speed, with displacement, with inefficiencies forming, that indicates, okay, that low is likely to be kept in place. We're not going to reach down a second time. We can. Sometimes you'll see that, maybe with SMT, but that would be the first indication. So any closure above that sibi. Second indication would be if we have a gap forming on top of that, so displacement. Third would be if you have, a swing low forming inside the gap with the mitigation, with the inefficiency, and then we start to expand away. Then to me, structure is there, order flow is there, time of day is approaching. Everything at that point would be lining up. So we've got, 2 minutes left until the 10 a.m. So this would be the short-term draw still for the daily perspective, right? Because that's the current daily high in terms of Wednesday, January 15th. That is the current daily high. So we're going to expect that to be ran out by 10, by or after 10. And then the higher time, you're not just looking at lower time frame, you're looking at higher time frame. So that would be the 21,372 level. You're looking for that to be paired with this. So yeah, we could take off some partials there if we wanted to, but also up there. So we've still not closed above that sibi. I know we wicked above it, but I want to see a full healthy candle closing above. I don't think we have 10 a.m. news either, unless I'm mistaken. Price closes above the 949 high. Is this when we would trim stop loss? Correct. That's a good idea. Yep. Fractal market maker buy model, trimming it to the 955 low would be reasonable. So I'm looking for a gap to form. If we can displace quickly and we have a gap somewhere like right here, that would be best case scenario. So there's your displacement. There's your new high post 10 a.m. as outlined and as predicted. So like Maddie said, stop trim below the 955 low would be reasonable. Look at the displacement. There you go. That speed. So random. Now we've got the mitigation. If we have a gap there, if we can come back into that, oh my gosh. Beautiful. Silver bullet. There you go. But 21,373 still on the dock. Maddie, I would say you could even trim it to here. This underneath this 21,299 level, basically. Assuming this rejection block won't be tagged. Beautiful PA. See how easy this is compared to Monday and Tuesday? So easy. You know where it's going. Clear bias. You can kind of just relax. Okay, that swing high is going to get tagged. Post 10 a.m. Time is on our favor. You've got a nice swooping opportunity at 9:30. You've got entries during macros. You've got entries before macros. It's very simple. And this is why for 2025, I'm going to reduce the streams until these high probability days so we can actually learn from them. And I'll cover my bias later on to the stream. Actually, I think as soon as we tag this swing high, I'll cover an in-depth bias because I know I didn't post a daily bias today. And it was kind of just a, join. Here's a quick bias. Here's where we're going. And watch the lower time frame. So I'll look at the bias and I'll explain why I came to that. So watch this get tagged here. Oh, by the way, look at the gap forming with the mitigation block. Beautiful. And the sibi. All of that lining up. So that's not how you can anticipate things like that. You pair this with this. Got this overlapping section. So look at that cluster of PD arrays. Should be quite strong. So I'd expect next 4 or 5 candles to tag this. This candle actually be close above that wick. Thank you very much. Come on. Here, boy. Just wait. It's not gonna hit, no. There you go. Just gotta be patient. There's your bisi liquidity tagged post 10 a.m. as outlined. I'll share my execution. Give me 1 sec. Let me trim my stop. Beauty PA. Perfect PA, if you will. So now next one on the list is 21448. But in the terms of price and time, this is all the delivery you're looking for at a minimum. All right, so now time is lining up. We've got a new high post 10 a.m. We've got a bias liquidity on the hourly chart or above being swept. That's perfect. You don't need anything more than that. And that's what you want to study. What you want to study in the beginning is this. Okay? This is all you need. This is the macro entry into a fair value gap plus an order block up into a new time-based liquidity pool and post 10 a.m. So this is all you got to study, because if you can see this repeating once a week, and I know damn well it does, that's your whole model. That's what, like 60 whatever points. I don't even care how many points it is. Just focus on, okay, that's a consistent trade I can take. I don't need to get the lowest low. You will eventually get the lowest low. But if I can just scalp these little tiny moves that are consistent, it's very easy to trade. Okay. And that's what you got to be focusing on. That's really it. So I'll cover the bias really quickly. Let me share what I'm looking for right now. I'll screenshot this trade that I took. Oh, can I turn the trade lines on? Give me a sec here. Bills and orders. No trade lines. There we go. So this is what I'm looking at. I went into stream trades. I'm still long on one contract up until 21448 on demo, of course. But I got stopped out earlier on at 943. I wanted this to be the swing low of the session, and I wanted this to displace up. And it's kind of my fault because we didn't actually have any displacement above the SISD truly. So I got a little antsy there, went long prior to it really giving me exactly what I wanted. Then it dropped down one last time. Then I identified, okay, so we're just filling this hourly gap. And I was waiting for some sort of confirmation of reversal. I was a little bit more hesitant though in the second entry, because I was like, okay, I want to make sure we're actually going up this time. So I dropped to a 15-second chart, and I was looking for PD arrays to be traded through. So once I saw, okay, we got through there, we got through this one. At that point, I was anticipating this to be the SISD in here on the 15-second chart. So I went long just with the market order with half the position size as the original trade, and then doubled back up once I saw we started getting movement, which is that second entry you'll see, and then taking partials as we go up. So on the swing high, let me mark this out really quick. SISD 15-second. Yeah, 15-second inversion fair value gap entry basically. Text black. So partials then were on this swing high, so current daily high. I'm gonna take one off there. I'm gonna take one off at here, right at 10 a.m. as soon as we formed the swing high there. Take one off at the 21,373 buy side liquidity. Most of my position came off there, and then I'm also going to be holding one for the 21,448 level. with stop and in profit at this point. So stop loss originally was when I was entering long in here, it was at the rejection block low. So 930, I'm anticipating that this wick is not going to be traded into. And once I got the closure above that 1 minute gap and the 15-minute bisi's, sorry, sibis, let's go to the 15-second. Once I saw that, I'm not anticipating any of these to be filled, if that makes sense. A lot of times near reversal points, when you see these reversals, you're going to have these quick, energetic, just turnarounds. Quick, very, very. I mean, think about this. I explained this on a one-on-one call I had with someone yesterday, where basically if you're the algorithm and you want to get last ditch liquidity right before you flip the market, what are we going to do? We're going to spool price. So all momentum traders who see it's quickly running away, they're going to jump on in, and that's going to be the last bit of liquidity that's absorbed before we kind of shoot it back up. And there's not going to be any retracements to allow those people to get back, close out the positions, except for breakers. That would be your first mitigation. Second mitigation would be here. And you can see all the positions. I'll explain that. It's algorithmic theory. I'll explain it later. But that would be what you're looking for. So stop loss would be on underneath the wick right here is where I originally placed it. I kept it there until basically until we got this order block being tagged into. Once I saw that, I'm trimming it to, I think it was right here underneath this. So assuming that's going to be left as a breakaway gap. Kept it until partials were taking. And then once we took out that swing high, I'm trimming it to here, which would be a fractal market maker buy model. And then we can also trim it probably to underneath this order block at this point, since we have a fractal market maker buy model, inefficiency being tagged into, order block, mitigation block, tons of PD arrays in this cluster that you shouldn't see traded through if it was truly bullish. So I hope that makes sense. And that's typically why I don't explain trades beforehand or while I'm trading, because there's a lot of stuff in them and it lose sights from the actual tape reading, which is what I'm trying to do. I'll never be a signal service. So if you joined to get signals, you're not going to find it here. It's more of just teaching the process. So if you can learn how to tape read and learn how to find draw liquidity and use the content available to you to improve, all the trading stuff will make sense. Like, you'll be like, oh, it's just an entry. I'm using time most times. Like the PD array that I enter on, if you've watched that part 3 video on the entries, I can use whatever PD array that I want that shows up in that leg, because I know what kind of reversal stage or what kind of price delivery stage I'm in, what PD arrays are going to be present within that stage of delivery, and I'm going to just grab the easiest one that makes sense. I'm going to put stop on a protected low, protected high, ride it up into a new time of day, or ride it down to a new time of day, whatever it may be. Okay. -2, -2.5 from the manipulation leg would be a great final target. Correct, yeah. So if you look at this high, low, lower, low, high, lower, low, last manipulation leg, now you could argue it's this one, just because that's a higher swing high. You also could argue it's this one, but either way, it doesn't matter which one you pull it from. Take your target, -2, -2.5, lining up above that buy side. And what I like to do is, standard deviations by themselves to me mean nothing. You've got to pair them with a higher time frame pool. And if we're looking for targets, what's our higher time frame chart that we're looking at? The 1 hour chart, preferably, or the 15-minute chart. And yeah, if you've got something like a 4-hour sibi, like Maddie said, that would be nice. You also have this swing high, which lines up with it. And then yeah, if you go to the 4-hour, there's probably that 4-hour sibi right there. Also paired up with the order block, so you could maybe use the order block open. Things like that. It's unnecessary, but it's not a bad idea to continue to look up. And you can see in here, if you know, even if you don't have the PDF and you've seen my explanations of the session schematics, if you pull up that, I'll send it into here. This is a picture I posted on Twitter a while ago. Desktop. Prophecy PDFs. New York session schematics. Here you go. So if you haven't seen this before, download it. It's slightly old, but everything in there still applies. And you can see that there's going to be these 2 open high-low closes that's formed during the New York session. A lot of times you'll see these on high probability days, but there's going to be this 8:30 to 10 open high-low close, and then a lot of times there's this 9:30 to 10:30 open high-low close as well. So when we have 8:30 news, A lot of times what you'll see is 8:30 to 9 creates the low in this case. And then up here you have 9:30 to 10 creating one end. And then over here you have 9:30 to 10 creating the one end. And then 10:30 to 11 creating the opposite end. And sometimes you can kind of interlink these. So sometimes you'll have 8:30 to 9 o'clock forming the low, 9:30 to 10 forming the high of that range. But then you can kind of stack them together, where maybe 9:30 is creating the high, the low of this range, and then we're going to expand up into 10:30 for the next open high low close, which I would assume is likely to happen today. We're going to expand post 10:30 is my estimate, closer to 11 o'clock. And obviously reach for that and possibly up to there. Let me screenshot this one last time. But I mentioned I'll cover the bias shortly. So the bias, we'll do this really quick. I was bearish going to today. I did a good 10-minute video recap. I sent it to some students I'm privately mentoring. I was bearish. We had this original consolidation above a sell side pool. We've got PD array SMT. We've got the short-term SMT. We've got PD arrays being broken. All that to me was like, oh, we're going to go down tomorrow. I think I recorded that lecture maybe like at midnight or something. Then, but even if you have a good bias, the 8:30 news is always going to be like the end all be all for the bias. Like, I don't care where CPI is going. It's going to tell me everything that I need to know of where this day is going to go. So even if I had a bearish bias and boom, we shoot up here, I'm not worried about it. I'm not like, oh, I'm wrong, or to me, I'm happy because now look, it's got to go up and it's got to go down. And if you disassociate yourself from being right and wrong and rather just you expect nothing and you allow everything. So you have no expectations. You just allow when you read whatever's given to you. It's very easy to flow. You flow between biases. You flow between trades. You always look at the next trade. If you take a loss, it's not a big deal. It's the same thing with bias. At this point, you can obviously frame a pretty good bullish bias. We've got in here, if you look at minute opening price, you've got a nice drop down into, first of all, PD arrays in this mess are not really being respected. So there's not a lot of high quality PD arrays that can be like, oh, look, it's trading into this and we're holding it, other than maybe this order block. Down closing candle range, inefficiency. So maybe you could count that as a high probability order block. Kind of hard to see in real time for us to respect that. That's why I say it's kind of difficult to outline. But we're holding that with candle bodies. Starts to trade back up. We drop down. We have a short-term low here that is ran out. So that would be our 1 hour manipulation. And you pair that with the gap as well if you wanted to. And what time is that form at? 3 a.m. So I know you're not supposed to pattern price, but if you compare that profile with, okay, what's a likely draw on liquidity or what's our likely bias, it becomes powerful. So, okay, maybe we have a rough estimate of we're bullish, and then you see this drop down, the wick closing or the body closing above that short-term low. You're looking for SMT there. If we can find it, I think it was on YM, if I'm not mistaken. You can see in here on YM. So 3 a.m. candle. There's your SMT between these lows. Right? And then now, okay, it's going to be a classic London protraction profile where 2 to 5 is creating the low, 7 to 10 should create an entry, and then 10 to 12 should be our high point. So now coming to the charts, okay, 8:30 displaced up. I'm already assuming that's going to be the low of the session. So we're not going to see 8:30 come out, we're not going to see it drop all the way down into there. We're looking for that higher time frame PD array. This is where you could use the ATM model. So 15-minute POI, 5-minute SISD, 1-minute entry. I'll explain that here. So we have a 15-minute POI. You could also pair that with the inversion gap over here from the hourly chart. Right, so 15-minute POI tagged at 9:30. You're looking for a 5-minute SISD. So tagged at 9:30. Trades up here at 9:40. We displace above that last down closing candle. Even through 9:45, we displace through there. That's a SysD. 1 minute entry inside of fair value gap, right in there. Pair with the order block, right in there. Short-term discount dealing range, drops into it. Use that to go long up into the swing high. And that would be your ATM model fully printed. And you can kind of work backwards in the entry of, okay, if you're already expecting it's going to be a bullish bias into New York Open, you could just use 930 as that retracement leg and expand back up. Notice how, as well, 830 expanded. Is 930 likely to expand again? Most likely not. It's going to be the functions of news drivers and volatility is either to manipulate or expand. If the first one expands, I'm expecting the next one to manipulate. That doesn't mean it's going to come all the way back down. It's just going to manipulate a little bit and then move to the draw. So you're anticipating something like 930, that first 15-minute candle, to take stops or retrace or fill fair value in this case down to the discount end of that hourly imbalance and then start to move back up. Okay, and then that's when you see, okay, once we've confirmed that's a reversal point, now you can start to just ride it all the way up and continue to trim stop, hold positions until we see a clear disrespective order flow. And when I look at disrespective order flow, I'm looking at specifically the 5 minute. Because the 1 minute, there's so much PD arrays that you could be like, oh, this would be our SysD. But then you look underneath that and there's like a 5 minute gap. Well, the 5 minute gap is going to take priority over the lower time frame. That's why I mentioned this gap here. You know, if it wants to trade through this, I'm not freaking out. You didn't hear me anywhere in there freaking out that we're trading through this gap and closing through it. I wasn't worried. Because we have a 5 minute inefficiency below us. I have my stop loss in a good position. We got plenty of PD arrays that if it trades through that, that's fine. And that's, you got to get comfortable with seeing these kind of things where your bias may be up here, but then as soon as you see something that indicates, okay, maybe we're going down, you don't instantly get scared or try and flip bias or worry. It's more of like, okay, we're just allowing for things to happen. However the market wants to move, we allow that to happen. And you do predict, but you also respond. You predict where it's going and you respond to what's given. So if you're predicting, okay, I'm looking for bullish price action, and then as a result, there's nothing in there that allows you to capture that move, you respond by not trading. You respond by sitting out. And it's always, you're getting paid by making good decisions. And those decisions are based on experience and your rules and a plethora of other things. So that would be my bias going to the day. You know, and it doesn't have to be perfect. But I think if you get into the habit of, okay, here's my bias before the day, you know, maybe the next night or the night before, then you come to the chart, see if that bias is met. Okay. If it's not, you can flip bias off that because you've already done half the work going into the session. It's very easy to flip bias in the morning if you've already done 30 minutes the night prior looking for that estimated draw. Now, to be honest, I'm still bearish on the higher time frame. I don't think we leave this sell side in this original consolidation behind. I find it kind of odd. Like, I would actually favor the rest of this week to be bearish, but I don't know. Anyways, order block here. With the inefficiency. So just look at that. 1030 medium impact. By the way, look how nice that intermediate term low was kept in place. I'm going to take this and we'll copy that there. Gap filled, short-term low with the stop run after that. Perfect. Oil inventories, got it. By the way, I know there's some new people in here as well. Do not feel like you have to know all these PD arrays. Even if you're seasoned and you've been here for a while, or if you've been an ICT trader for however many months, you don't need to know all these PD arrays and how they work and read them all. Like, I'm sure some people are going to look at this chart and be like, there's too many things for me to understand. You don't need all this. Like, you could remove all this and just mark out the look at the 3 blue gaps I have. And if you mark those out, you're perfectly fine. You don't need intermediate term lows. You don't need these SysDs. You don't need mitigation blocks. You don't need all that stuff. I mean, by the way, look how, remember how I mentioned earlier this stream, I was like, okay, I want to see displacement, mitigation block. If you have fair value gap, it's a really, really high quality entry. Look at that. drops into the gap, barely touches the mitigation block, forms the intermediate term low. Perfect. Look at what time it is as well. 10:07. That's within macro time. And during silver bullet time. What did I say that was going to be? Silver bullet entry right there. Tags that. Boom. Fly up. Pretty cool. Also got this gap. Can you go over your weekly profile analysis and what you predict for the rest of the week? To be honest, I don't really know what's going to happen the rest of the week. I had an expectation of bearish. I've got to redo an entire weekly profile looking out. So I'd favor if this day finishes, depending on how a lot of the times, depending on how Wednesday closes, you can figure out the rest of the weekly profile. So by Wednesday lunch, you can kind of figure it out. I don't really have any strong weekly predictions. So I'm just gonna, especially since after this trade, I'm basically hit my weekly target. So I don't need to trade on Thursday or Friday. We'll still have streams, but I'm not, working overtime to try and figure out some moves, if that makes sense. I'll still provide whatever's given if there's something high quality, but I'm not too worried about it. Make sense? Core content month 4 helps a lot. Yeah, with the PD raise. Yep. Oh, sorry, I missed a question. What was this? At the 955 retracement, is there a way we can predict that we will retrace to the order block and not just the fair value gap beforehand? Hopefully that makes sense. Got it. So if you go back and you study retracements in price action, I'm not talking about reversals, I'm talking about retracements. How often, when you have a fair value gap, does it tag the order block? From what I've seen, when I'm entering off a fair value gap entry, as long as it is a retracement state of delivery, there will be a supporting order block that's tagged into it. And if you go back and you look at that that screenshot I shared, right in here, let me see if I can open it up and I'll share it on the screen so you don't have to pull it up. Everyone see this, hopefully? So this entry, it's either the entry techniques that are easiest is either going to be a fair value gap within discount of a short-term dealing range if we're bullish with an order block, or a breaker plus fair value gap price does not need to reach into discount of this range. So notice how also breakers are classifications of what? An order block. So it's a fair value gap plus an order block. From what I've seen, to answer your question, most times, like I would say maybe 70 to 80% of the time that we have that fair value gap entry, it's going to be touching into some sort of order block. So this, I'm anticipating it to drop through it. The reason it may not is because if you look to the left over here, then you could argue this is a supporting mitigation. But for the most part, that's the entry you're going to get is when we pair that fair value gap with an order block. That's why in here, we do trade into the fair value gap. Maybe you missed this bullish order block here, but we've got the mitigation, which is what I was calling for. That's going to be a strong entry because we're not going to see a lot of retracement into this range. Makes sense? And yep, same thing here happening right now. I've got a fair value gap. That's why I marked out the order block because I understand there's a gap here. My eyes are instantly going to, is there an order block that supports it? Yes, right here. I'm going to mark out that opening price. You could mark out the fair value gap just to see how it closes through it, but that's going to be the price point that I'm looking for as a respect. I'm assuming now at this point, we'll get hopefully a SSD through there, expansion up, this same kind of fractal price action in here that we got over basically in here. Just slightly different. They're approaching 1030 as well. Still waiting for the FX replay backtesting session. Oh, I forgot about that. I could do today. I'd be able to do it today. We'll do it on the weekend on Saturday. We'll figure it out. Yeah, fibs. I got you. Main one is this one, 50%. You already have one of these, I assume. I hope. Maybe the first one. Second one is the targeting fib. That's the only other one I use. Oops. I appreciate it, Syrian. Good to hear. If your value gap is in premium of that dealing range, could be expected to be run through and reject the order block. Yeah, exactly. That too. Right. Can we take into consideration the current 5-minute bullish order block wick price is currently trading into? Yeah, you could. Yeah, like maybe consequent encroachment of the wick. I'm not really too concerned with that though. Failure swing near IP to sell side. As you can see, the candle buys there for the most part holding that order block. See you, JKX. We'll see you tomorrow, hopefully. Now, you also could look at that as a stop trim because now we have a short-term low to the left of it, short-term low to the right of it that's filling a gap. And this was a stop run. So a stop trim to there wouldn't be unreasonable. I still think this is the best, but that's not too bad either. So after we form a new high post 1030, that would be a new time of day to find an exit on. So this becomes a short term, just like at 10 a.m. We have this short term draw here that's forming. So that would be, potential area of exit. You also could be looking for that 21,488 level, 448, sorry. And if you go back to the hourly, there's probably another swing high. Yeah, right here. We're trading into this gap. If I mark this out, we've got this 1 hour gap we're trading into. Notice how many wicks and inefficiencies are in there. And this is the inefficient portion. So you've got a swing high here. Got this portion of the gap. I'm not going to keep the other ones, but that negative 1.5 lining up perfectly with another buy side pull on the hourly. Nice target. So I'm looking for price to start to spool now, preferably into 11 o'clock. Take out that high and keep going. I'm still looking for 448 as my preferred exit, and I'm just going to stop trim all the way up. But yeah, I want you to notice how much easier this kind of PA to read is once you are on sides. Like everything is held for the most part. There's a lot of ease in time and the price delivery. It's not a lot of deep retracements. It's not like you're getting stop runs. There's a singular stop run, which is right there. And that wouldn't even been that bad. So, and then compare this to Monday's PA. You go to Monday really quick, or Tuesday, and you're like, why would I ever trade those days? Like, wow, there's no point in, like, look at this. I mean, like, yeah, you could trade it, you could find entries, but I don't like that. And don't be hindsight herald and start looking, oh, you could use the 1050 macro over here. And sure, you could, but are you going to be able to anticipate that going into the day before you've already taken 3 losses? Probably not. Same thing over here. Monday PA. So I didn't stream on those 2 days because to me, there's nothing in here that screams high probability where I'm confident entering on this, right? And I know there's better days on the week, and you trust that. Okay, I'm not going to execute today because I know there's better moves on the week. I know there's going to be at least one entry that provides me some sort of 2-to-1, and I don't have to stress about getting stopped out or is this the right entry or is this the right time? You just simply just wait, be patient, and you trust your analysis and you trust your model to perform. I agree. Taking a loss on those kind of days is much difficult too. Yeah. And as new traders, what you got to realize is there's good and bad losses, right? A good loss is a loss that's within your model, it's a kind of trade that you want to take 10 times out of 10. And that seems like a hard thing to grasp in the beginning of like, why would you want to take losses? You always want to win, but you're anticipating the losing. Like every trade that I get into, I'm always thinking it's going to be a loser. Where's my stop going to be? How am I going to respond if this is a losing trade? But it's much easier to be like a losing day like this of, okay, everything's in line. I've got a clear bias. I've got a clear draw on liquidity. I've got a clear manipulation at a key time. I've got an entry at a key time, targeting, all that stuff. It's much easier to be like, okay, that was the highest quality entry I could have gotten, and it provided a loss. I'm fine with that. Rather than yesterday, when you get a loss that's outside of your model, a lot of times you have this idea that you want to fix it. At least that's what I think. I would think, okay, I took a loss here. I shouldn't have been trading. Let me just try and fix it so I'm back to break even. And then you're in the process of fixing it, you just blow the account. You're like, what was the point of that? By the way, I'm probably going to get stopped on my runner on this little trade down. I've got to add that rejection block of the wick of the turtle soup. Doesn't matter, but right here's where my stop is. So let's see. And no, guess not. So eventually you'll learn, okay, it's all self-sabotage. We make trading way harder than it is, and it's all our fault in a sense, which is both relaxing, like it's comforting and it's annoying at the same time, because you're like, okay, no one can help me, but at the same time, I guess if I control my mind, that's the only thing I need to be profitable. And you kind of step aside. A lot of times we make it harder than it is because we make these expectations and these rules of what it should be, because you've either seen other people do it and you have this expectation. And yeah, there's things like shiny object syndrome or perfection that we want to try and chase, and it never comes to you. And you find that as soon as you kind of just sit back and instead of needing something, you become that which attracts. So if you want to become a trader, if you want to get payouts, consistent payouts, it's not about the payouts. You don't worry about the payouts. You worry about, how do I become the person that attracts those kind of things in my life? And that's applicable to everything, right? Whether it's the type of people you want to attract in your life, the type of job, the type of lifestyle, all of that is just, there's no difference between you and that person other than a mentality. I think I got missed on my stop loss by half of a point. What is this? 20? Oh, it was by a point. Never mind. My stop is right here currently in demo. No, as soon as I said it's going to come and wick me out. Good times. Anyways, so that's my last contract. I was looking for 24,448, but I'm fine with that stop out. That's a healthy position to be in. I'm in a nice little stop. So that was the last one. I think the full pull on there was about 100 and was this 21? The last contract was 21,362, 47. So that'd be 100. I think 110 points, I think, on the last one. Something around there. So not too shabby. I don't know if it's gonna be today or Saturday. I've got to figure some things out around the house. So I'll let you guys. It'll be recorded regardless. So if you can't make it, don't worry about it. It'll be recorded. I'll post it on YouTube as always. But I'll try and ping either the day of or a couple hours before, whether we have it or not. Thanks for doing a stream trade. It helps build confidence to hold during the ebbs. Yeah, of course. Yeah, a lot of times I know I don't share a lot of the stream trades I take. I take trades off of stream. I just don't post them, just because from my own experience, if I post everything, it kind of messes with my mental capital. Because I feel like I have to be right, not just for myself, but for you guys. That's why I don't stream like these kind of trades either. But every now and then on a high probability day, I think it's good to just see, things working as they should. But yeah, hopefully you can kind of just relax. The main thing is just being confident in yourself. Okay. So if you can be confident in, okay, I know when my setups are going to be there. I know how to execute on those high quality days. I know how to manage a stop. I know how to manage risk. It's relaxing. You're certain there's things you can control and there's things you can't control. Things you can't control, the variance of winning, getting stopped out. Like in this case, I probably just got stopped out on that last runner, and it's going to run all the way to my buy side now. I'm not re-entering. I'm perfectly fine with that because it's just one of those things where if it happens, it hurts a little bit. It's like, yeah, it sucks because I could have probably gained another 60, 70 points off of it, but it's not a big deal. And I can learn from that and I can do it for later. I'm not going to sit there and be greedy and try and capture something that, um, I don't need. There's always another opportunity. But the main thing is being relaxed. So for me personally, my anxiety will manifest most times in physical ways, and you want to use your emotions as signals. So that's why I don't drink coffee before I trade, because I know, okay, I'm already pretty locked in when I'm looking at it. The last thing I need is even more adrenaline to be in my system and cortisol to be in my system, because those are the two chemicals that are released when you take a loss. So the last thing I need is even more of those in my bloodstream. I want to be as relaxed as I can be, and that comes with the building of pain tolerance. So in the beginning, someone's going to see this and be like, I mentioned this before, but if you trade through there, everyone's going to be freaking out, especially if you're new, of, oh no, my bias is wrong, or oh no, whatever, XYZ. And that's fine. You see it enough times where it just kind of, you become numb to it. It's not as sharp as it once was. By the way, SysD for Valley Gap, we'll see if this holds. Shoots us back up. I could care less if we expand it up more. I'm still expecting it to reach up into 11 o'clock if we can get up into there. But, not a huge deal. So, like same thing tomorrow. Tomorrow, if there's high quality, we have 8:30 news. So if there's a high quality setup, which I'm imagining there's going to be, we'll take what's given. If there's nothing there, I'm fine with sitting out. And the reason I'm fine with sitting out is because I trust the model. I know that I'm not missing anything by literally, like on those kind of days, like on Monday, I'll just tell you I slept in. Like I was like, Monday, I know I don't got to do any work today. I don't got to watch the charts. I'm gonna just sleep in until like 10:30. Like it's just, that's for me is like a way where, because if I'm up, I'm gonna probably pull up the charts, or if I'm not doing something, I'm gonna get bored. And that's just a way that I'll keep myself accountable. See you later, Nathan. We'll catch you soon. But yeah, it's a lot of these psychological issues in the beginning comes from lack of certainty. You don't know what's going on in the market. You don't know what your model is. You don't know what your win rate is. It's not necessary you know your win rate and RR and stuff like that, but just a lot of uncertainty. So you base a bunch of expectations of where price is going to go, and you beat yourself up if you get one little tiny thing wrong. But I mean, imagine how many things that I get wrong. I get them wrong probably daily. Different PD rays, different biases of where I think price is going to go, and I'm fine with that, because for me, it's not about being right or wrong. I'm in this to make money. That's the underlying goal, right? So, you can be wrong and still make money. You can have a wrong bias and still trade with the bias in mind and still make money off of that. And that's the goal. So my win rate, right now, if I have to go off the top of my head, is probably around, for the year currently, maybe around 80%. I think I've taken one loss on the year so far. I could be wrong, but it normally hovers in a yearly perspective. It normally hovers around 70, 70+%, maybe like 65 on the low end, but typically I'm looking for around 2 to 4R, so it's more than enough. Because remember, if you're looking for 2R, what do you need? 40% win rate. 40% to be profitable. You literally can be wrong more times than right if you're targeting a 2R and you still can make money. And for me, that was kind of an eye opener of like, okay, I don't have to have a crazy high win rate. As long as I understand, okay, I'm just gonna take the ones that are given to me, the base hits, and sometimes I'll get a 4R, or sometimes I'll get like today's trade. I don't even know what today's was. Today was maybe like, if I had to guess, yeah, it was a good 2-3R, 2.5 plus. So exactly, and that's Duomo said. I have about a 50% win rate. I need to cut out the stupid small losses on low probability days, and he's still getting payouts. So there you go. Probably what he would deem as subpar win rate. I think that's perfectly fine. But you learn, okay, it's not about, there's two ends of it. And this is what Jerry Tendler wrote in his book, where you have an A, a B, and a C game. So he's like, Duomo's saying, okay, I can cut out on the stupid small losses. That would be improving in his C game, where he knows, okay, there's, or she, I apologize if I, you're going to cut out the stupid losses. So the days where you can remove, like maybe on Monday, maybe someone traded Monday. Well, then how can I know that that's a low probability day where I don't want to engage? Things like CPI beforehand, things like no news, things like already pre-market liquidity was ran out. Therefore, you're not going to look to those days. So you're constantly improving your C game of removing small mistakes and stupid losses, the ones that you don't need to take anymore, and then increasing your A game. So finding higher quality setups, holding for longer trades, trimming your stop loss. Because sometimes what you may be forgetting is instead of capturing larger ranges, it's getting better entries. Because think about it, this here, if I was to enter on the SysD, say it was like slightly lower, this here is we'll do a 3R, right? That's a 3R. Now a 6R is, let me do this. 6R is this. All right, up to maybe that -2, -2.5. That's a 6R. You're like, okay, I know to increase my A game, I've got to hold longer trades. That's one way you can do it. Or you trim your stop. And now with the tighter stop loss entry, you have a 6-1 with the same kind of price movement here. You don't need to get, crazy large moves, but you still have a 6-1 opportunity in here just because of how tight your stop loss was. Right, so you're using the same risk, but it's just a tighter stop. So you're using sometimes more contracts and whatever it may be, and you can still capture 6-1s on average. So there's different ways. It's a game. It's just constant improving, and it never really gets easy. I think you can get comfortable in it. Like once you understand how trading works, like the actual game itself, I feel like you can kind of get consistent in it. But if you always want to improve, right? Like if your goal is I want to hit 100K a month or 100K a week, whatever it may be, you've got to constantly improve your A game, C game, and your mental game, which is definitely taxing because especially if you've already done it for however long, and you're constantly trying to improve and fight to get to that profitability point. Once you reach it, it's like, okay, do I really want to push my edge? And that's probably a conversation that everyone's going to have with themselves later on. There's a bunch of different things. Like I don't really talk about that stuff, but I'm sure it's probably beneficial for a lot of people. Is just the psychology part of it of as you approach profitability or as you reach profitability, how does it, affect you? Because a lot of people in the beginning, you have a fear of failure, which I 100% have. It's like one of my biggest motivating factors is I have a major fear of failure. But then once you get to that point where you're like you prayed for and you worked hard for, there's fear of success, where it's like, okay, now that I've reached this thing, I'm scared of doing anything because I don't want this to flee, like leave me. or you're scared to take a trade, or you're scared of, different things, or maybe you feel like you don't deserve the position you've been put in, whether it's profitability or whatever it may be. And those are like the real conversations that no one really talks about, publicly. But I think it'll be beneficial. I think we'll probably do some of those in 2025, have like strict psychology streams. I'm sure it's not going to get a ton of people watching in on them, but for those who are interested, we'll probably have maybe like one a month or one a week. We'll figure it out. Did you read the book Psycho-Cybernetics? I have not. No, I read it. Currently, I'm reading Think and Grow Rich by Napoleon Hill. I'll check it out. If you can send me a DM and send me the link to it, I'll check it out. I'll pick it up, add it to the list. Anyways, we're kind of just chilling and chatting. But for me, drawing liquidity is still, if I can get maybe this run up here and into these pools, I would like that. If it doesn't materialize, not a huge deal. So hopefully you're able to learn something from today, whether it's through the bias or the execution or the tape reading, whatever it may be. I will post the stream recording later today. Oh, it's by Justin. Oh, recommended by Justin Merlin. I see. I'll definitely pick it up. Yeah, hopefully you learned something. The stream recording will be posted later today as soon as it's done rendering. So if you want to check that out, probably not a bad idea if you want to go back and review. Otherwise, tomorrow and Friday, the streams will be based off of price action. So if we get something good like this, I'll stream. If not, then expect either a FX replay / backtesting session or one of those psych streams. I'll fill you guys in on whatever the schedule is. So take care today. Journal if you took a loss. Journal if you took a win. Journal if you didn't take anything. Do the things that are necessary to succeed. And I will talk to you guys soon. Peace.